Good morning from Chicago, everyone. It's 8:11 a.m. Central Time, Wednesday, May 28th, 2014. Thanks for joining. Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. A quick run through overnight news. Key elements, Germany's May unemployment change came in at plus 24,000 versus the expected negative 15,000. Unemployment change higher than expected. Eurozone M3 is lower than expected year on year, expected 0.8% versus 1.1%. Fed's Lockhart expects the economy to bounce back to 3% GDP in Q2, expects first hike in second half of 2015. Ukrainian president-elect, hang on one second, let me turn that off. Ukrainian president-elect says Putin can influence the end of the conflict once talks to stabilize situation. Rejects immediately joining NATO, so he seems to be caving into Moscow's demands. So that could bring that problem to a more peaceful end there. The U.S. dollar index strength is helping push other currencies lower earlier in the session. The dollar has just come off with a strong pop in the bonds and in the Japanese yen, seeing a reaction in the euro as well. Yields in Europe and U.S. pushing higher on anticipation of month-end demand. So those of you who are looking at bonds and treasuries, Bund, currencies, you're seeing what looks like odd movement, and looking around to see why that is, and it's mainly being attributed to month-end demand and a fair amount of POMO this week, a lot of auction, a lot of money coming into the market. Looking at today, what's on deck for today, not seeing anything. 8 a.m. About 15 minutes ago, ECB's Constancio was supposed to release some comments. At 10:30 Central, we have a 2-year FRN tap for 13 billion, a 4-week bill auction for 25 billion, and a 12-month auction bill auction for 25 billion. And then at noon Central, we have a 5-year note auction for 35 billion. That's what I meant by a fair amount of Fed activity this week. Remember, tomorrow is Ascension Day in Europe. Switzerland and Scandinavia are closed. The other markets are open. U.S. initial claims, U.S. GDP, U.S. spending home sales, natty gas, and crude oil tomorrow. Let's look at yesterday's action and how incredibly off my primary hypothesis is. And that's okay. The idea is to come in with several plans and see which one the market plays, so that we can put the trade on without having to generate or come up with an opinion as the market trades. I'm not interested in doing that. I'm interested more in in just determining what could happen and then reacting when it does happen. So let's look at how it happened yesterday. This is my short-term trigger chart right here. Yesterday we opened at 1904.50, open auction out of range, so we had a test down, test up, lower low, buy a tick, buyer step in and push through to 1907 for a 3.5 point rotation. Then really nothing, very little volume, very little going on until it starts to push higher and through to 1909. Stays up against the highs, continuously making weak highs on the day. Then it one tick the 1909 to 1909 quarter right here, and to me this looked like a failed auction. And then we immediately got the largest rotation down of the day, approximately 5 points down, and with the failed auction and then the seller coming in and the delta going down, my read at the time was it's much more probable that it would continue to rotate lower, and start to push into this gap zone that we've left behind between 99.25 and 1903.50. That didn't happen. We put in a double bottom at 1904.75 right here, and then it started to walk itself back up to the initial balance high, which is this yellow line. That's the first hour high and low, to push to 1910, and then to close near highs. So it closed right at the IB high of 1909 even. Very bulky profile. 6.5 points of range on the day session. This is the lowest since May 13th. The volume, though, on the day session was 712,000 contracts. Right down here, 712,000 contracts. That is approximately 50% of the 20-day median volume for the ES. The median volume for the day for the ES is about 1.3 something, 1.32 million, and we got 712,000 yesterday. So about half the volume, and that's we saw that across the board. Every 15-minute bar basically showed about 50% of the expected volume, or the median volume. Okay, so very little participation. We have a point of control shift up, as you see here, along with value and price. So the market's still one-time framing up. You can see it here. Since this low here, we've been one-time framing up. Now it's the fourth day, one-time framing up, and then it left a pretty weak high. Overnight. The low has a really good taper on it. This looks like a fairly strong low here yesterday, even though we had a double bottom here at 1904.75. The low looks like it tapered off, as we would expect in an orderly auction. As prices went down, there was less and less volume coming through, showing less and less interest, with volume stacked up at the high. And this strange-looking high volume node here at 1909.25, giving us almost a double distribution profile with a weak high. So the expectation was for it to continue overnight, and it did. The overnight high is 1914 even. Okay, so there's not much more to the structure. Normal variation day, which is the most common day type. Not much to the structure that we can talk about, other than to say that there was at these high prices, the market seems to be maintaining price levels pretty well, but it's doing so on very, very little participation. Basically, sellers running for the hills and hiding in the bushes at the moment. So here's the overnight session. The overnight session completely dead until the European Open. European session pushes it to 1914, and then we hold steady up on the upper end for a while, and then just about a half hour ago, the market rolled over and pushed the low and is pulling back. We're trading right against the overnight point of control, which happens to be that same price where we had that high volume node at 1909.25. There's a fair amount of volume going off in this 1909 half. Same kind of strange single price activity that we saw last week, where it seemed like there was a participation at a very specific price. There's a lot of volume going off at one or two prices, which is unusual. We have a weak low on the overnight session. So I'm looking for this to open in range. We have about 10 minutes to the open. I'm looking for this to open in range. We're right up against yesterday's high, and I'm looking for this to start rotating down to 1906.75. I can't say that the top of the overnight profile tapers in an orderly way. But again, volume is low here, 175,000 versus by now should be around 220,000 if it were normal. So again, volume is very light, back to holiday trading sort of thing. So don't know what to make of all of this. I just know that I don't like it. I don't like this sort of trading because it lends itself to a lot of manipulation, and both sides are not participating in the market, and so it's hard to gauge the health of the auction, to be honest with you, because one side is just kind of cowering away, and the bulls have it, and it's moving, but it's not doing so on any conviction whatsoever other than price. So I'm not seeing volume follow through with price as prices go higher, and I'm not seeing a normal taper like you would normally see on prices that are becoming excessive. Okay, as it makes highs, it makes weak highs and weak highs and weak highs and weak highs and continues higher, as opposed to having a day where we do have a taper and a clear rejection. So I have to assume that any pullback is just that. It's a small pullback, and the uptrend is strong, it is intact, and that is the stronger position as of right now. On all time frames, long, intermediate, and short term, the market is looking higher, but with the overnight session the way it is, let's zoom this in a bit. The overnight session with the way it is, having moved from the high to the low, having put in a weak low against the overnight low, I expect that the initial test this morning will probably be a poke out of the 1910 and then a rotation and break of 1908 quarter towards 1906. That's what I'm looking for as an initial play. The profile yesterday is fairly balanced. It's a bit boxy, but it's fairly balanced. So I'm anticipating that 1906 would be the first key area would test once it gets down to the point of control. It's my primary hypothesis. I'm looking for the market to check higher, push 1910 possibly, and then roll over and push into 1906.75. But overall, the stronger position is still the long. Yesterday we had a gap, and my expectation, as I'd outlined here, was for my primary hypothesis was to test up early for an open test drive or an open auction out of range opening type and push lower to close the gap. So I expected it to either push up immediately and then get responsive selling back to 18.99 and a quarter, or to chop around like it did in the morning, but then break the low and move towards 18.99 and a quarter. That would give the buyers a better base to go higher from. None of that happened. My second hypothesis was to attempt to push lower to 1902 and then find buyers to target 1906 early, and then push to higher prices. I have these measured moves for targets. The initial measured move that we got to yesterday was 1906.50. Above there, 1915.15, 1922, 1930 quarter, and then the big one is 1938. You might note that one down. 1938 even on the high side. But at current compressed ranges and volume, I don't know how long it's going to take to get up there. But it would be healthier for the market to push lower and shake out the weak longs, seek lower prices to find better buyers, stronger buyers for the continuation higher. Again, the trend is up. But the initial test I expect this morning is to break the overnight low and move towards 1906.75 and 1906 early on. I don't have much more to offer than that. This is not my type of market, but I'll continue to do these trader bites just for consistency and to stay in contact, and also to encourage those who are not seeing what this is trying to do and are not trading long-term buy and hold kind of investors to be patient. Be patient. You keep, when the conditions are not favorable for your type of plan, for your edge, then your only choice is to keep your powder dry and take inventory of what you have and just sit tight and wait. Okay, we don't have to be active all the time in the market. We are traders. We are not fund managers. We don't have to work people's money in the market all day, all night, and answer phone calls as to why the money's sitting in cash. We can keep our money in cash and wait for those opportunities when we can place intelligent, favorable bets with risk defined. Good luck today, and I'll catch you on Twitter. For those of you who are not following me on Twitter, I suggest that you do so. I outline the morning. I tweet early on, and then I stop early so I can take care of other business. But you know, the commentary to these Trader Bites continues into my Twitter account, and anybody can follow that. You're welcome to do that. Take care.